voice is audible. I think anybody can confirm.
I can hear you,
Okay.
Shreyas.
Okay.
I think let's continue.
Yeah. So before we will request Vishwajit to kindly give introduction to our today's speaker.
Hello everyone, good evening everyone. So it gives me immense pleasure to introduce our esteemed speaker for today's session, Ms. CA Varsha Lund ma'am. So the session's topic is Decode Your Tax Code, Income Tax Returns Simplified for Students, organized by the Chamber of Tax Consultants. We are privileged to have with us CA Varsha Lund, a distinguished chartered accountant with deep expertise in the field of direct taxation. She has been practicing at NK Kalra and Associates Chembur since 2019 and is also a passionate educator. She teaches accountancy at Vivekanand Education Society's College and serves as a visiting faculty at SIES College of Commerce and Economics. Academically, Varsha ma'am has an impressive profile. She qualified chartered accountant in 2019 and holds a DISA certification from ICI. Additionally, she is a law graduate and has recently submitted her PhD thesis in business policy and administration at University of Mumbai. She is also a proud UGC JRF scholarship holder. Additionally, she has completed her MCom and BCom from the University of Mumbai, securing first rank at the university level for BCom. With her rich blend of academic brilliance and practical experience, she is here to simplify the complexities of income tax return filing for students and professionals. So, I ca- so please join everyone in warmly welcoming Varsha ma'am.
Thank you so much, Vishwajit, for the wonderful introduction. A very good evening to all the attendees and the panelists on the screen. Before we begin, I take this opportunity to thank the Chamber for providing me this wonderful opportunity of conducting this seminar today. It is even a greater privilege since this happens to be the first event of the student committee in its centenary year, which in itself is a historic milestone that we're looking at. Okay, as a young professional myself, I've had the privilege of wearing two hats, one as a practicing CA and another as a faculty member guiding and interacting with young, brilliant minds every day. This dual experience has given me a unique lens, okay, to not just apply the law, but to break it down, simplify it, and share it with those preparing the shape for our future of our profession, all young students that we have on board today. We as chartered accountants are really very empowered by our profession to understand, interpret, and apply the various laws that help our client to in various compliances that they have to be doing. This and of course, with great power comes great responsibility. So, as chartered accountants and as assistants and article students to these chartered accountants, it's our responsibility to ensure that we comply with the law and help our clients grow ahead. Okay, I would request the participants if you all have any questions, you all can keep typing it on the Q&A section and I'll address it as soon as, I mean, as and when we are able to. Um, Hello?
Varsha, if you need Shreyas or Vishwajit to help you with the Q&A, just let them know.
Yeah,
Yeah,
I'm there with I'm
Yeah.
there on if there's anything.
okay. I just wanted to check I'm audible, right?
Yes, I think it's perfect.
Okay, okay. Interestingly, today happens to be 30th July. If it would have been any other year, any other usual year, none of us, nor the students, nor us, would have been able to even spare a moment of a day because 31st July is the usual deadline for filing of returns. But this year being exceptional, we are here and we discuss it. Okay. Is my screen visible?
Yes.
Okay. Okay, so this year, financial year 24-25, the due date for filing of returns has been extended to 15th of September 2025. And this extension is attributable to the fact that there have been many changes which have been made in the income tax forms. So the changes that have come in, due to these changes, we have new forms, new ITR utilities, our software is being updated, etc., due to which we are here today. And we'll be discussing this session, the due date for which is 15th of September. The first point that we need to understand is the extended due date 15th of September is not applicable to few of these people. So the people who are not covered by this due date are individuals and firms under audit, partners of firms which are under audit, corporate entities, and entities to whom transfer pricing is applicable. Basically, these are all assessees where the due date happens to be normal due date is 31st of October for filing of returns, and for transfer pricing it is 30th November, which we expect to be extended again. But yeah, the people to whom 31st of July was the original applicable due date, 15th September happens to be the new due date for these assessees. No. As a part of this session, we will have three sections or three stages which we are going to have a discussion on. The first part of the session will be focused on what all documents, details you require from your clients, what workings you should ask for before you start working or preparing on the returns. This is nothing but your pre-filing stage or the documents that you require from your clients. As we go ahead, we will be discussing what workings you're supposed to prepare, what things are you supposed to check, what things are you supposed to reconcile, and how are you supposed to prepare the computation and the income tax return. The last part of the session will be covering after filing of return, what are the few formalities that you have to ensure that you do so that the process is complete. I request all the participants, whatever questions you have, you can please keep typing on the question answer section or the chat section, and we will address it as we take ahead the session.
I think you've muted Varsha.
Yes. Hello.
Yes, you're audible now.
Okay. As we go on to the pre-filing preparation stage, one thing that all of us need to be aware of, and possibly we also have we have some knowledge of this. Very recently, around 2-3 years ago, a new scheme of taxation was introduced. This new scheme of taxation under Section 115 BAC gave the assessees an option to opt for the scheme where they have to forego certain deductions and take the benefit of the lower tax slabs that the has to offer. So assessees had to choose either they go with the old scheme where they claim all their deductions, ATC, ATD, etc., what we traditionally know. They take all deductions and choose a regime which has a higher slab rate or tax rates, or they go for the new scheme of taxation, which they are not allowed to take the deductions and exemptions which are listed there, and they can get the benefit of the lower tax rates. From the year 2023-24 and 24-25, the year that we are talking of, the new tax regime has become the default regime. So every assessee by default will go under the new regime unless they opt to go for the old one. Another important point to note for non-business assessees. So assessees who do not have business income, basically salaried employees, people who have income from other sources, capital gains, but not business income, they get to choose their regime every year. So every year they decide either to go ahead with the new scheme of taxation or to opt for the old one. But in case of business assessees, there are some restrictions to as to movement between the schemes. So since default scheme is the new scheme of tax, the assessees have a choice. Business assessees, if they want, they can go to the old regime, but then they'll be able to come back to the new regime only once in a lifetime. So in case of business assessees, this option of choosing has to be done with lot of precaution, care, and taking into fact a lot of consideration that will come up in the future. So yes, For 24-25, the new tax regime is a default one, which gets pre-filled on the income tax return unless the assessee decides to opt out of it and go for the old scheme. Yes, what deductions, what benefits are there, that we will be discussing as and when we discuss the different sections and heads where we are supposed to report incomes. Yes. I come to the flow of the session that we discussed. The first part of the session, we are going to discuss what documents are required before you even start working on the returns. The documents that you shall require have been classified into four different set of documents. So I have made a very comprehensive list. It should cover most of the documents and most of the case of the assessees, unless there are some exceptional cases. So I've classified them into four parts so that when you all are working on some returns and you want to ask your client for the data, you can follow this list as you start working on them. Okay, the first part, the first set of documents that you shall need are basic documents: the PAN number of the assessee, the Aadhaar number, very important mobile number and email address. You have to ask your client to give their bank account details. So all the bank accounts that they hold, all the bank accounts that they hold, wherein they are the first holders, they should give the name of the bank, the account number, and IFSC. Interestingly, after the introduction of the annual information statements, AIS, TIS, income tax knows more number of bank accounts of the assessee than the assessee themselves know of. So many a times it happens is on the income tax portal, on the AIS, we see the client has around seven bank accounts, but the client has given us details of only four. And when we inquire with them, we get to know there were some old dormant accounts which they had opened years ago but did not operate, but the accounts are still there. So, as per the law, we are supposed to report all the bank accounts of the assessee where they have their first name. So, the details required would be the bank account number, the name of the bank, and IFSC. So, ensure that when you are asking for documentation from your client, you take and let them know what all bank account details they are required to give you. Okay, as the next thing that you would require from them is the bank statements or the passbook for all these bank accounts. So typically the period that we're looking at is 1st April 2024 to 31st of March 2025. So we should ask our clients to give us all their bank statements and passbooks. Um, Next thing, you should ask them for the last year's income tax return and computation. A very, very important point, so that there is continuity maintained in the return filing. So, what will happen is this checklist is something where you're approaching a client for the first time. Okay, if the client has been the client of your office since long, you will have most of the details in your records. But as a matter of good practice, please get these confirmed from the client. So you should ask for the last year's ITR and computation of income. You should download their Form 26AS from the website. And a very important aspect which has come up since last 2-3 years is the AIS TIS. These basic documents have to be there for each and every client before you start working or preparing the computations or any workings. Going ahead, we need incomes. I've listed some documents income specific. So if an assessee is employed and they're having income from salary, mandatorily you'll have to ask them to give their Form 16. Form 16 has two parts, Part A, Part B. We will need both of them. In fact, we will also need a detailed breakup of salary from them, which will be Form 12BA. Most of the companies, when they issue Form 16, this forms a part of the annexure of the Part B. In case there are the said 12BA where all the breakup of the gross salary, basic, bonus, allowances, perquisites, etc., have to be reported in the return separately. In case the Form 16 does not have these details, you will have to ask your client to give the payslip for all 12 months so that you can find out the breakup of the gross salary. But since the last 3 years, it's mandatory to give a detailed breakup of the salary that is mentioned in Form 16. The second head of income, income from house property. If your client is having income under this head, you have to ask a few questions. Number one, how many house properties do they own where they are either first owners, second owners, co-owners, etc. the number of properties you'll ask them. Based on that, the allowed rule is two SOPs are allowed. Apart from that, if you have more than two SOPs, you will have to show the deemed rent there. So you have to inquire with the assessee all the properties where they own a share. Number two, if the properties are let out, you have to ask your clients to give you rental agreements. The reason why you need rental agreements is to find out what is the annual rent, per month rent kitna hai, annual rent kitna hai, the name of the tenant, PAN of the tenant, area of the property, exact address of the property. These are some things that we will see it ahead also. But yeah, these are the things that you're supposed to report in your return. And so you have to ask your clients for the rental agreements. You have to also ask your clients for the co-owner details. So if Mr. A and Mrs. A are jointly holding a property, Mr. in return of Mr. A, you have to mention the percentage of share of Mrs. A also, and also mention her PAN number. So co-owner details very important. Last thing, you have to ask your clients for home loan interest certificates if you have to claim a deduction under Section 24B, interest on housing loan. The deduction is claimed basis the certificate the bank normally issues. Uh, in case of assessees who have business income or income from profession, we shall need a profit and loss account, a balance sheet. If the assessee is registered under GST, we shall also need their GST returns, because the annual turnover, purchases, etc., which are mentioned in the GST returns have to be matched with the income tax returns. Most of the clients, or maybe some cases, the client may not prepare a profit and loss account, balance sheet and give you, but the client may give you bank statements and other details where you are supposed to prepare the profit and loss account and balance sheet. So before you start preparing the return where the assessee has business income, ensure you have a profit and loss account made and a balance sheet made. Very, very important head, income from capital gains. Now, the documents that you need for reporting income under capital gains depends upon the nature of capital asset which is involved. Most considering the data in India, so many people are investing in the capital markets. Um, if your assessee has had trading in shares, mutual funds, etc., you have to ask for a realized gain loss statement from their broker. In most of the cases, the assessees will have more than one brokers where they are having different demat accounts with different brokers. Please ask for a realized gain loss statement from all these brokers. Here, a practical challenge that you might face is the assessee must have changed the broker. So, suppose once upon a time I had demat with, let's say, HDFC Securities, and I had those shares. Mid year, I changed my broker to ICICI Securities. So now, possibility that my original cost data was there in HDFC Securities but not there in my ICICI Securities. So you have to ensure the sale of shares that you're reporting, you have the correct cost for that security. So, again, case specific. If you have if the broker has been constant, it will be little easier for you to get the realized gain loss statement. If not, you'll have to ask the client for the records of the contract notes for all this period where you have to report the sale. In case of assets which are properties, you will need the sale agreement, the purchase agreement of the property sold, any other documentary proofs which they claim to be for cost of acquisition or cost of improvement. So all you should have documentary evidence for all the elements that you're going to report under the capital gain head. Again, if the client is investing in new property and they are eligible for deductions, exemptions 54, 54F, bonds, new property, etc., whatever exemption, whatever deduction is being claimed, please ask for documentary proof for the same. Moving on to the next head, in case of income from other sources, FD interest certificates, dividend statements, any other relevant documents. So if the client is having an income from virtual digital assets, that is crypto, you have to ask for the statements from that source. If the client is having income from, let's say, post office, gold, bonds, etc., 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 whatever the nature of income, please ask relevant documentary sources so that you can match what is reported in AIS, what is there in the document, and what is supposed to be reported in the returns. The next set of documents. So we spoke of the basic documents required. We spoke of income specific documents required. Now, the third set of documents that you should look for is deduction specific documents. Now, these documents would be very helpful if the client is opting for the old scheme of tax. Since deductions are allowed only under the new old scheme, um, you will need these documents if the client old scheme is beneficial for the client or they wish to opt for the old scheme. So for all the deductions under 80C to 80U, you should ask your clients for LIC premium receipts, PPF passbooks, home loan certificates where you can see how much amount of the principal repayment has been done, medical premium receipt, medical premium certificate. Some assessees claim medical expenditure for what they have done, spent for their parents, or senior citizen assessees who do not have a mediclaim but are spending for medical expenses. You should ask for the relevant expense documents, donation receipts for claims under Section 80G, education loan interest certificates for claims under 80E. A very important point to note. So all these years, we used to rely even on the bank passbook. So suppose I see in my client's passbook that he's paid the LIC premium of 32,000. और बैंक पासबुक में लिखा है that there is a premium payment of LIC, I could rely on it and claim the deduction. But with the new forms this year, there is a specific requirement where any deduction that is being claimed, you have to report the policy number, the relevant document number, the policy origination date. Similarly, for home loan, you have to report the bank from which the loan is taken, the home loan account number has to be reported. The date of the closing balance of the loan has to be reported, etc. So this is something which is very new to this year's forms. For financial year 24-25, it's a mandatory requirement. If there are any deductions which are being claimed, a detailed document description has to be mentioned in the income tax return. So it becomes very important for us this year to collect these documents from our clients, because we will need to report all this in our returns. The last set of documents that you need to ask is some documents which are case specific. Like for example, for the forms, any resident who holds any foreign asset or has any foreign income. So, for example, my client, if they are residents in India, but they have a house property in UK, or some assessee, as a student, I must have gone abroad and have had a bank account there. Maybe that account is not operational now, but there will be some income that will come to that account. If not income, at least I hold an asset. It is an important and a very, very important requirement to report all the foreign assets in the income tax return. This is mandatory for residents and this has implications far and wide beyond of what we can think. So foreign income, foreign asset details required. This is mandatory for residents who have foreign income or have foreign accounts. Okay. This will also be required in cases. This will also be required in cases where the assessee is a signing authority in any of the bank accounts of any other entity abroad. So for example, I may be a director in a company which is registered in Singapore and I'm a resident in India. If I'm resident in India, I don't own that bank account because company owns the bank account, but still I'm a signing authority there because I'm a director there. I have to report I have to report the said bank account in my income tax return. Of course, this has no income implication, but a declaration that has to be put in Schedule FA. Apart from that, depending upon the scheme we're choosing, and if we're opting out of the new scheme, there is form 10IE or 10IEA as applicable, opting in, opting out, which has to be filed. And in case of assessees having business income, since this choice is very restricted, there is a requirement to file this form. So you have to always check in the past 2 years what is the client's decision, whether they went for the old scheme, they opted to the new old scheme, etc. So you have to take the relevant form because your decision of this year will largely depend on what was done earlier. Then there is Form 67, which is to be filed before the return is filed if the assessee is claiming any credit of any foreign tax which is paid. So suppose uh, I hold a house, I hold a bank account, let's say, or a PIS account abroad, and there on my income, there is some amount of withholding tax being done. Now, when I'm filing my Indian income tax return, I have to claim the credit of the tax that I have paid there. To claim that credit, I have to mandatorily file Form 67. Apart from that, Schedule AL, which is Schedule Assets and Liabilities, this has to be filled if the income of the assessee exceeds 1 crore. Earlier, this limit was 50 lakhs. This year, so details of all assets and liabilities have to be reported for assessees where the income exceeds 1 crore. This is even for cases where the assessee does not have business income, but they have to maintain details of assets and liabilities that they have. So you have to ask your clients to give all this data if it is applicable to them. So this is where your preparation stage ends. The documents that you require, I'll again go through them. We discussed basic documents, income specific documents, deduction specific documents, and other case specific documents. Do we have any questions on
Yeah,
the chat box as of now?
yeah. If you can take a few questions, yeah.
Yeah.
Many of them could be general questions and could cover in your further presentation. You can take up that time also, or how you're comfortable. So
Okay.
something from Manav Shah. Which type of income can be claimed as exempt under Section 1010D?
So 1010D speaks of gratuity. Yeah, so there's a calculation on what amount of gratuity is allowed as being exempt. You can claim that based on the calculations that come up. So maximum allowed limit is 20 lakhs, and you have to check the limits basically based on the income level, what is allowed as an exemption and claim it.
Correct. And if you could throw some light on, not completely relevant, but yeah, how much of this process of IT return filing can be optimized by using artificial intelligence? Can even the computation part be done by AI, or should AI just be used for increasing productivity? If you have any views to
Oh, okay.
it.
So most of the offices used various softwares for filing income tax returns. AI can be used for, let's say, summarizing your bank statements and like if there are repetitive transactions in the bank account statements, you could use them to group it, etc. But since this is a technical part and something which is core to our profession, I think human intelligence will always be above artificial intelligence here. But yeah, the repetitive task of classifying information or maybe identifying the doc. So truly speaking, when your clients are giving you data, not everybody gives you a complete list of data that you want to. So a lot of time goes where you have to keep chasing your clients for the documents to be given. So you can have an automated list or reminder set where your time gets saved on the coordination part. But yeah, per se, if you talk
Completely
of
in agreement with you.
yeah, so yeah, per se, human intelligence exceeds AI in all senses. But yeah, we can make our life easy by automating the tasks that trouble us.
Definitely. If you can throw some light on how do we calculate intraday turnover in cases wherein speculation income is being
So
calculated.
I think the question could have been F&O transactions का calculation कैसे करते हैं, because intraday is pretty simple. Intraday, whatever is your gain or loss comes in your profit
Correct.
and loss accordingly. If the question is on F&O, so F&O, what typically happens is you have to calculate your turnover based on the absolute gain or loss that the assessee is incurred. And this turnover, so basically, I will take all my gains, I will take all my losses and add up and see what the turnover comes to, and also check the audit applicability based on that. So this is based on a guidance note which ICI issued in 2014, where method of calculation of turnover has been given. But coming to the question, intraday turnover, whatever is your speculation gain or loss becomes your profit or loss accordingly in your schedule VP.
There's a question. There's a hand raised by Prabhakar. I'll just allow him to talk if that's okay.
Yeah.
Prabhakar, I've unmuted you. If you can please. You're not audible, Prabhakar. I think I think we're not able to reach him. He's unmuted,
Okay.
but yeah, taxability of repayment of debt by REIT.
Oh, that I'll cover
Yeah.
ahead when we have it.
Yeah.
Yeah.
Okay. Yeah, you can please continue.
Yes. So with this, we move on to the next part of the session. Now we're all prepared with the documents that we want. Now comes the actual preparation. What do we do? How do we do? We have gathered all the data that we needed, all the documents that I've listed. Now, what are we supposed to do? Step number one, we have to check your previous year details and understand the nature of what your client or your assessee is having. So, suppose all this while till last year, my return of income had salaries. I have, let's say, two bank accounts, two house properties, etc. So to understand what do I need to do this year, first take an understanding of the last year. So another reason why I should be doing this is to maintain continuity. Whatever carried forward losses of last year, which must be there, which I need to claim this year, I need to use this year, I will get to know only once I see the last year's details. Secondly, if the client has given any data which is new to me or something that is not there or missing, which was there earlier year, I know I have to ask the client. So if I had data for two house properties last year, this year I see data given only for one house property, I will have a question in my mind, is the second data missing? So when I ask my client, he may give me an answer, oh sorry, I forgot to give you the details, and he gives me the details. Or he might tell me, no, this property now is no longer in existence, I've already sold this property. Then I know I have to go and check the capital gain computation, and I ask for the relevant documents. So before we go on to your current year's computation, it's very important to understand the background of your client's income and take relevant notes, details, and understanding of what was there last year and what are you supposed to do this year. So yes, the checking of previous year's details purpose is to maintain accuracy and continuity, to understand the nature of income and the recurring transactions that the client might have. It also helps to identify the documents that you would require and if there is any missing data which the client has not given you. You can compare your current year's workings with the previous year's workings and check for any inconsistencies and omissions. There is a sudden decrease in salary, so you may come to know maybe the client stopped being employed and started their own business venture for which there's a separate current account which you were not aware of. So yes, you get to know a lot of things from understanding what was the data earlier. You have to also very importantly check whether your previous year's return was filed in the old scheme or new scheme. Now, this becomes very, very relevant in case of business returns where the option to exercise, to opt in, opt out is very limited and based on a lot of things. In case of non-business returns, this is pretty simple. You can check after your workings which scheme turns out to be beneficial and decide accordingly. But in case of business returns, you have to be very careful of what option you're selecting. The second step that we have, once you've understood your last year's data, the nature, etc., now you have to prepare or you have to summarize your bank account transactions. Now, why do we do this? What do we do here? So, all the bank accounts I take of my clients, I may classify the receipts into different heads, maybe interest income, rent income from property one, rent income from property two, rent income from property three, salary income, etc. So, I have to analyze the entire bank account of my client and see what all receipts are there in their accounts. For cases where there is business return, even the payment side becomes relevant to find out what are the eligible expenses that you can claim in the business return. But apart from business incomes, for all other assets, prima facie, receipt side is what is important. Again, recent years after COVID, where UPI has become very active, most of the clients you will find a lot of entries which come through UPI. Now, 90% of these entries might be just sharing of expenses amongst friends, just temporary transfers here and there. But yeah, out of those UPI transactions, also, you might find out some level of income which the client earns income and forgets, but you get to know when you see the bank statements. So you have to classify all receipts into the bank accounts. And some people, some clients are so specific, they will all classify and give you. Your work is to check. Number two, you have to identify relevant entries on the payment side. This I told you is important when you're doing business returns, business income, because whatever are the relevant expenses, you'll be able to claim those in your profit and loss account. Also, in case the assessee wishes to opt for old scheme of tax, you should look for payment entries of LIC premium. You should look for payment of medical premium, PPF, etc. Whatever ATC to ATU allowed items, which most of you will be aware because you'll have passed your inter exam and you'll have studied all this. Whatever are the allowed expenses or allowed payments or investments, should make a note of them so that you take appropriate action on them. Most important thing when you're preparing the bank account summary or you're understanding the entries that are there in your client's bank account, you should check you should have a check on the periodic entries. For example, if I'm a salaried employee, I should have 12 entries of salary coming from the same employer. If I have changed my job during the year, I will have, for a period, I will have salary from one employer. For the second period, I will have salary from another employer. Bank interest, normally banks um, give interest quarterly, so you should have 4 entries of interest there. Dividend is periodic again. So whatever are periodic entries, you have to check the completeness of the data. You have to ensure the entire period is covered when you're summarizing. In case of sale of properties or sale of equities, etc., where the sale proceeds are coming into your bank account, you have to ensure that the entire proceeds have been received in your bank account, if not in the same year, in the next year, because this becomes an important part when during assessment, if the officer is asking you for the details of the amount received on sale of property, you should have them summarized and be careful while you file the return. um, in all the entries where there has been tax deduction of source TDS, you have to ensure that the net amount has been duly received in the bank. So, for example, my Form 26A shows company FD interest of 1 lakh gross, 10,000 is the TDS on that, which means in my bank account I should have got 90,000. I need to ensure that all the entries appearing in 26AS, if they are supposed to come in my bank account, have they come or no. This was step number 2. Step number 1 was checking your previous year's details. Step number 2 is summarizing your bank account. Step number 3, and a very, very important step, you have to reconcile the TDS with Form 26AS. You have to, okay, I presume most of you are aware what Form 26AS is. For the ones who are not, Form 26AS is a statement that shows the TDS that various entities have deducted from your income and they appear under your PAN. So typically, when you log into your income tax portal, there's a section where you can download your Form 26AS. It will show the party who has deducted your TDS, let's say HDFC Bank. It will show the section under which TDS is deducted. So if it is interest, it will be 194A. If it is salary, it will be 192. If it is any professional fees, 194JB, etc. So you will see the section under which TDS is deducted, the gross amount which will form a part of your income, the amount of TDS that that entity had deducted, and the net amount that you received. Now, this is very important because sometimes what happens is you will see. So, I was supposed to receive a net amount of 90,000 from some Mr. A, but in my bank account, I see that I've received not 90 but 1,20,000. That is when I realized that there has to be one more entry of TDS in Form 26AS which is missing. So I will have to possibly contact the person and tell him that I don't see the TDS entry in Form 26AS. Is there a reporting error from your end? Please rectify your TDS return so that I get the credit. So very important, you have to match your 26AS with the TDS. The TDS appearing in with Form 26AS with the documents that you have and with your bank statements. Another reason why you should be reconciling your TDS with Form 26AS is in case of assessees where cash basis of accounting is followed. So there are two accounting methods that we have, mercantile and cash basis. Mercantile is where the income is recorded on accrued basis, irrespective of the fact whether I received it or not. Cash basis of accounting is where I record income based on what I receive. Most of the professionals, they follow cash basis of accounting. It's allowed as per law. So cash basis of accounting, if my client has deducted TDS, let's say in 23-24, he showed a provisional expense in 23-24, but I've got the money in 24-25. I will be showing that income in the year which I receive it, 24-25. I should also claim TDS of it in 24-25. So TDS technically appears in 26 years of 23-24, but based on the method of accounting I follow, I want to claim it in the year 24-25. So if you have to be doing this, you have to ensure that you click a particular option in the return which says carry forward income and TDS. So when I reconcile my 26 AS, I come to know that there was some income last year which I had not shown in my return, and there was some TDS which was unclaimed, which I need to claim now. So all these points, and there may be some cases where 26 TDS appears in my 26 AS now, but I may claim it later based on the method of accounting that I am following. So to take care of all these adjustments or to take care of all these intricacies involved in cash basis, it's very important to reconcile your TDS with Form 26As. The next step we have, super important step since the past 2-3 years. There's a very, some people call it magical, but yeah, AIS is an annual information statement that is available on the income tax portal. Now, this statement shows a lot of information about you. Any entity where you've submitted your PAN and there is a requirement of the law where they are supposed to report any transaction that you have done with them appears in this AIS statement. This AIS statement that is there, it will have information containing your interest income, your dividend income, sale of securities, purchase of gold, credit card expenses, etc., etc. Possibly this statement knows more about you than you yourself will know about your sources of income. So yes, based on your PAN, this is a statement which is generated by the income tax portal. You can see so many transactions over here. Some transactions will be relating to your income. Some transactions would be just reporting requirements which are there. Very, very important that you match this entire AIS with the details or the bank statement that you have. Lot of surprises come in this statement. Like I earlier mentioned, there will be some cases where you'll find some bank account number written over there against your PAN. And your assessee or your client might not remember that they have such a bank account. After you give them the account details, after you tell them that this appears here and they inquire and find out, they will remember long, long, some years ago, I was having this bank account which I did not use, or it's dormant, it is inoperative, etc. But they have this account. So they might come to know, they will check and find out, okay, they had such a bank account. Sometimes what happens is AIS will show sale of securities of, let's say, 26 lakhs, 28 lakhs in a year. But the broker has given you a statement which is showing only 22 lakhs. So you need to find out what is this additional 4 lakhs that's coming on my PAN. Now, the possibility that the information is correct and the client doesn't know, in that case you will have to ask your client, please check this, find out and tell me so that I can give appropriate effect in the return. Most of the times, oh, in fact, in sometimes it will happen that AIS has extra information or incorrect information. The information does not pertain to my client, but by mistake it is reported there. Somebody reported a wrong PAN. The transaction was to appear in wife's AIS but has been reported under husband's PAN, etc., etc. In that case, what you're supposed to do is you're supposed to provide a feedback on the annual information statement online. You have to go and provide a feedback. The feedback will show options like information does not pertain to me, information pertains to a different tier, information pertains to a different PAN, information does not belong to me. Very important to put this feedback, because nowadays what's happening is your return is entirely being matched with AIS and your AI comes into play. The department has tools where they're matching the income as per AIS and income as per your return. In case there is a mismatch, they are issuing notices, or they are issuing notices asking the clients to clarify or stating that this is additional income, etc. Then again the client has to go through the hassle of reporting it, finding out, etc. So it's very important at this stage only, before you file your return, you have to match your AIS completely. If you have some information in AIS which is pertaining to you and your client is not giving you data, please ask for it and match it. If the client is correct and actually there is a mismatch or there is a error in the AIS, please provide an appropriate feedback on the portal. The AIS is modified after you provide a feedback. So important to have this matched, because otherwise later on you may get a notice to prove the difference or explain the difference, etc. Next, we go on to credit of taxes. Whatever TDS has been deducted and it is supposed to be deducted and claimed in the year, ensure that it is duly done. If the client has been paying advance tax, you have to put the details of the advance tax and take credit of that. Self-assessment tax, of course, after you finish the computation, you will ask your client to pay self-assessment tax. When he pays it, the challan that he gives you, you have to ensure that you put correct details in the return. So self-assessment tax, advance tax details include the BSR code, the date of payment, the code under which the tax is paid, and the amount of tax that is paid. Uh, Please ensure you all put these details correctly, because if you enter a wrong detail there, or there's some mismatch in the digit entered there, again you will not get the credit of the tax paid, and you have to again go and put a response, etc., which is a lengthy process. So prevention is better than cure. Check all these things before you file the return. Any questions as of now? Do we take some more questions?
Yes, please. There's one in the Q&A box. The
Okay.
schedule of AL in case of income exceeding 1 crore, this is
Hmm.
not available for SSCs with business income, is the question.
Okay. So the section of that return reads, you have to report assets and liabilities which do not form a part of your balance sheet. So if there's an assessee who has business income, he also has personal assets which do not form a part of his business balance sheet. In that case, you're supposed to report in Schedule AL only the assets which are not forming a part of his business balance sheet but are a part of personal balance sheet. But if the assessee has the balance sheet combined, like for example, I have professional income, I have a common balance sheet for my profession also, and my personal assets also appear in this balance sheet, then in that case, I'm not supposed to report it in Schedule AL separately. So the heading of the schedule reads, any asset or liability which does not form a part of your business balance sheet is supposed to be reported here.
In case of a business return, if the assessee has lost the option to opt out of the new scheme as a proprietor, can he start
Mhm.
a new proprietorship and get the option for a new scheme?
No, the option is based for
PAN.
a PAN. It
Correct.
can't be proprietor. So proprietorship PAN will remain the same. So
Correct.
what is decided goes along.
Yes. It's a long query. What if the TD, so the query is, what if the TDS has been deducted by the deductor at the rate of 20%, even after the
Hmm.
PAN was furnished to the deductor? And while filing the return, the chartered accountant forgot to include the TDS in the computation, which led to a lower refund. And now he's unable to rectify the return as the case is still with CPC. Even after filing many grievances, I think this is a little bit slightly in the nature of a
Specific.
specific query. I think we can skip that.
Huh.
There's another one. While comparing the capital gains report and the AIS, the quantities in the capital gain report and the AIS is the same, but the sale consideration in the capital gain report is less compared to AIS. What should be done in
Oh,
that case? Yeah, mismatch of cash.
so yes, this is a very common problem. But what the difference is, your broker's report will normally show a gross P&L where they do not include the charges, STD, etc. But sorry, the report includes charges, STD, etc. But the AIS will report gross figures. So that is where the difference arises. But you have to take as per CG report. Yes.
Okay, okay. That's I think you can continue.
Okay, one like this question again reminds me of very recent case that I was doing. This particular year, 24-25, since 31st March, 1st of April happened to be a holiday. There are lot many cases in AIS where the sale transaction was pertaining to 28th March or 29th March 2024. The broker's capital gain statement has it in 23-24, and which is claimed by the SSEs also in 23-24. But in AIS, we see the reporting is happening in this year. So in this case, we are supposed to put a response there that this pertains to a different year. This is a very recent problem that I came across while I was working for 2 or 3 clients. I saw this error which is there. Well, not an error, but yeah. So if we file it away that way, the AIS shows more sale as compared to the actual. So putting a response makes it relevant. Okay, so I'll continue, right?
Yeah, I think that's all in the query section.
Okay, yeah. Yes, this we already discussed. You have to check whether last year the return was filed under the new scheme or old scheme in the previous year. So when you're talking of business income, you can take appropriate action accordingly. Next, so these were all your, after you've taken the documents from your client, this is what you're supposed to do. I will just go through the process once again. You have to prepare, you have to check previous year details, understand the nature of income of the assessee. Then you have to prepare the summary of bank account and review the books of accounts, etc. You have to reconcile your TDS with Form 26 years. You have to reconcile your entire EIS with the data you have. You have to take credit of the taxes that you're paying, TDS, advance tax, etc. And you have to ensure the right scheme of tax is chosen. Okay.
One more,
Next week.
sorry,
Sorry.
one
No,
small
no.
query which you already touched upon earlier, so if you can just address it. So the query is for individual ITR, can we change the scheme from old to new multiple times? Individuals.
Multiple times. So if it is a non-business return, you get to choose every year. So multiple times, as in when we file the revised return.
No, I mean every year I think. I think the question
If
is
the
every year can
question
we
is
keep shifting?
Yeah, if the question is every year, non-business associates get to choose every year. In fact, another common query that people normally have is people who are employed or have salary return during like beginning of the year, they are supposed to give their preference of the scheme to their employer so that the employer deducts TDS accordingly. So beginning of the year, let's say I had chosen that I will go ahead with the old scheme. I submitted all documents, etc. Now my employer is deducting TDS based on the old scheme. When I'm preparing my computation after the end of the year, it's July, and I'm preparing my return, and I make a comparative and see that the new scheme is turning out to be more beneficial. In that case, assessee can go for the new scheme while filing of return. So choice of scheme. So this scheme, choice of scheme is very flexible in case of non-business assessees. The place where you have to be careful is business assessees. Non-business assessees may, even if at the beginning of the year you have selected something and your employer has deducted TDS accordingly, later on when you're filing the return, you can select your scheme again, which turns out to be beneficial, and you can claim the refund of the excess TDS that has been deducted. So that can be done.
Thank you.
And another thing, I hope this was the question, but if not, and the question was whether when I'm filing a revised return or an updated return, can I change the choice of scheme? Now, that is a very specific question and an area that is little um, to be taken care of. 99% of the cases, you're not allowed to change the scheme when you're filing the revised return. So, revised return should not result into an enhanced claim, or updated return shouldn't result into an enhanced claim, is what is understood. So yes, multiple times in a year you can choose, but return file ke baad that becomes final.
Okay.
Yes. Do we have any other
No,
questions?
no, that's it. That was one.
Oh, okay. So then, salary person, how this year income tax return to be filed? Okay. So we'll take it ahead from here. The next part of the presentation speaks of the applicable income tax returns. So there have been considerable number of changes in the applicable income tax returns. The first one, most simple and the cute return that is there, is ITR 1, which is also called Sugam. So this ITR 1 is applicable for individuals, particularly resident and ordinary residents who have income from salaries, one house property, other sources, and the total income up to 50 lakhs. Interestingly, this ITR 1 and ITR 2 differentiation of 50 lakhs was because of the Schedule A, which was earlier applicable when the income of the assessee exceeded 50 lakhs. Now that section changed where you're supposed to, the limit increased there. You're supposed to put Schedule AL only if your income exceeds 1 crore. But ITR 1 still is applicable up to 50 lakhs. So if I am an R and OR assessee, resident but not ordinary resident, or I'm a non-resident, I cannot file ITR 1. ITR 1 is typically and purely applicable to individuals who are residents and ordinary residents, have their income from salary, one house property, and other sources. So if even if I have capital gains or I have more than one house property, I cannot use ITR 1. ITR 1 is not for directors who are in a company, people who have investments in unlisted equity shares, people who have any assets, including financial interest in any entity which is located outside India, people who have any signing authority in any account located outside India, people who have any income from any source which is outside India. In cases where TDS has been deducted under Section 194, and this is a cash withdrawal TDS that's there. If income tax is deferred on ESOP, a person has any brought forward loss or carried forward loss under any head of income. So these are typically assessees where you cannot opt for ITR 1. So ITR 1 is a very small, crisp form ideally, but since it's small and simple, it's applicable to a very limited kind of assessee. So again, I repeat, ITR 1 is applicable for individuals who are residents and ordinary residents, have income from salaries, one house property, other sources, and the income level is up to 50 lakhs. So if I violate any of these conditions, by default, I have to go and file ITR 2. Coming to the next one, ITR 2 is for individuals and HUFs who do not have income under the head profits and gains from business profession, but also who are not eligible for filing ITR 1. So if I have income from salaries, income from other sources, income from house properties, but I own two house properties. So by default, I can't file ITR 1, but I'll have to file ITR 2. Now, second example, if I have salary income, I have only salary income and other sources, but my salary income is 2 crores per annum. Again, I can't file ITR 1, I'll have to file ITR 2. So ITR 2 is a little more detailed form where lot many schedules are applicable and lot many details have to be provided. Comparatively, ITR 1 is a smaller form where lesser number of schedules are applicable. Um, Another example, I am an individual assessee. I have only income from other sources, but I have carried forward losses of capital gains of earlier years. I again can't file ITR 1, I'll have to file ITR 2. So yeah, few examples where, or another example where I have some foreign assets, one single foreign bank account makes me ineligible to file ITR 1, and I will have to go ahead with filing ITR 2. ITR 3 is for individuals and HUFs who have income under the head business profession. So all professionals, CAs, CS, lawyers, doctors, or any people who are into business service sector, they are supposed to be filing ITR 3. Suppose I have income from salary, house property, capital gains, and business, I will have to go for ITR 3. Going ahead, ITR 4, again, like ITR 1, is a simplified form. ITR 4, which is called Sugam, is also a very simplified form, limited number of applicable schedules. This ITR 4 is applicable for individuals, HUFs, and firms other than LLPs who have income under the head business profession. But the income over here is computed on a presumptive basis, 44AD, 44ADA, 44AE. So, since these associates are opting for the easier regime, or let's say presumptive basis of taxation, the form is a little simple, which is ITR 4. Again, ITR 4 is not applicable for directors in a company who have investments in unlisted shares, who have any assets, including financial interest in any entity located outside India, who have any signing authority in any account located outside India, who have any income from any source outside India. In cases where TDS has been deducted under 194N, income is deferred under ESOP, brought forward, carried forward loss under any head, income exceeds 50 lakhs. There is income from short-term capital gains and income from long-term capital gains up to 1.25 lakhs. These assessees cannot opt for ITR 4. So important to understand is ITR 1 and 4 are simpler version of the forms. So that's why since they are simple, there's a list of assessees who cannot opt for it. So limited applicability forms, ITR 1 and 4, which we have discussed. ITR 5 is for persons other than individuals, HUFs, companies, etc. So basically, LLPs are filing forms under ITR 5. Um, any AOPs, BOIs will file form ITR 5. ITR 6 is for corporates claiming corporates and companies which do not come under the Section 8 category, and ITR 7 is for anybody else. Today's session, since it is for non-corporate, non-audit assessees, we will concentrate on ITR 1 to 4. That is our point of discussion. Any questions up to here?
Yes. So there is a question. What should an auditor check if Form 26AS is issued late or post-assessment? I think you've covered
26
that.
is.
I think what are the checks? Balance sheet, the bank statements is what you mentioned, is what we can be checking in that case.
Okay.
Also then, while calculating capital gains, is it important to file date of purchase and FMV of the shares?
Yes. So this FMV of the shares concept comes where we have the grandfathering clause. Assessees who have long-term capital assets, long-term shares that they are selling, and these shares were purchased prior to 31st of January 2018. That was a cutoff date given by the department. So if you have shares which are older than that, you have an option to take your cost or the FMV as on date, whichever is higher. So for entries where the shares are purchased before 31st of January 2018, it is mandatory to mention the FMV of those shares. In fact, for such cases, you are also supposed to report the ISI and number of those shares. But for all other purchases which are after 31st of January 2018, there is no compulsion or there is no mandatory field to report the FMV of the shares.
Perfect. In case an individual who is under employment and also has earned FNO income during the year, has done FNO, does he need to
Mm.
provide the entire balance sheet? Is the question.
So, as per law, yes, you're supposed to report your balance sheet. But what you can possibly do is you can prepare a balance sheet which pertains only to your FNO income. Let's say you'll have cash, bank, shares, which are specifically used and relate to that source of income. You can prepare a balance sheet stating this is your business balance sheet and file that. Because if you don't file a balance sheet, you'll get a defective notice later. So, you are supposed to report the balance sheet, but yes, you always have the option of not reporting your personal assets because balance sheet as a schedule is a part of a business profession head of income. So only your business or professional balance sheet is supposed to be reported in the income tax return. So you can prepare a small balance sheet where you have assets and liabilities related to that source of income and file.
Okay. Uh, Lawyers who are associated working under basically lawyers who are getting income from salary as well as income from profession, where in case of the independent cases, can they opt for presumptive if ITR 4 presumptive tax?
You can do that provided, so IDR 4 can be filed provided the income is less than 50 lakhs. Otherwise, you'll have to file IDR 3.
A person doing transport business, total turnover is 1 crore in financial year 24-25. Now he wants to opt for presumptive tax, but he doesn't have GST registration. If I file for ITR, can he get GST notice?
Possible because there is not only this business, any business, if a SSE has a GST number, you are supposed to report the turnover as per GST also, which happen, I mean, which should ideally match with your income tax return. In case of a mismatch, again, AI plays a role, possibility that you get a notice. Not sure whether in GST or no, but income tax definitely could get a question.
Okay, once again. Okay. If by mistake SA tax is paid on the same PAN twice instead of two different PANs, the amount is around 10 lakh. What can we do in this? We can skip it. It's
You can actually, I mean, two options. You can get the challan rectified and use it next year if needed. Otherwise, you can claim both and ask for a refund.
it's
That is
fine.
what you could do.
Yeah, we can proceed.
Okay. Yes, the next part of the presentation deals with some schedules, some important schedules, not all. I've listed out some schedules which are there in the income tax return, and these schedules will be found in which kind of ideas and what are we supposed to fill in there is what we're going to discuss next. First schedule that we're going to talk of is income from salary or schedule S. Here, all the income from salary or pension has to be reported. This schedule is applicable to ITR 1, 2, 3, and 4 all. um, Typically, what you're supposed to report here is your gross salary. Again, a recent requirement since the past 2, 3 years is where you're supposed to report a detailed breakup of your gross salary. So, if my Form 16 mentions a salary of 60 lakhs, I need to show what all comprises this 60 lakhs. So, maybe I will have components there, HRA, I will have a basic salary, HRA, any other allowance, performance incentive, bonus, etc., etc. I have to report a detailed breakup of the gross salary that I have. Apart from that, I am supposed to report the profession tax which is deducted from my salary over there. The standard deduction under the old scheme is 50,000, under the new scheme is 75,000. That gets auto-filled in the ITR. Also, like whatever softwares are being used for filing of returns, most of the softwares will auto-detect deduction based on the scheme of taxation you select. So, under salary head, I repeat, we are supposed to mention a detailed breakup. You're supposed, okay, one more important point, you're supposed to mention the name of the employer, address of your employer, the PAN number, the TAN number. Some other fields that are there is whether the assessee is a pensioner or no, whether the city where the assessee resides is it a metropolitan city or a non-metropolitan city. This is typically for calculation of HRA, HRA deduction. So yeah, in case of HRA deduction also, you're supposed to, if an assessee is claiming a deduction of HRA, he's supposed to report the rent that is paid throughout the year. So appropriate calculation of HRA deduction can be done. These are few things that you have to take care while you report income in Schedule S, which is income from salaries. Coming to Schedule HP, which is income from house property, this will be there. So tier 1 and 4, you can report, if you're using ITR 1 and 4, you're allowed if you have only one house property. If you have more than one house property, by default, you'll have to use ITR 2, 3 or 3, whatever applicable based on business income. House property wale schedule mein, you are supposed to report the complete address of your house property, the area that is covered, whatever the square feet or square meters of that property. You're supposed to report the name of the co-owners, their PAN, percentage of shareholding that they have. So, for example, Mr. A, Mrs. A together own a property. In Mr. A's house property schedule, you're supposed to mention that Mrs. A is also a co-owner. She owns 50% of the property. You have to report Mrs. A's PAN, and in fact, in the recent schedule, not a mandatory field, but yeah, the schedule mentions Aadhaar number also to be mentioned. If the property is let out, you are supposed to mention the annual lettable value. You're supposed to mention the rent that you have actually received. If the house was vacant for any period, you're supposed to mention, or rather, you're supposed to mention for how many months was the house in use or how many months was it let out. You are also supposed to mention the name of the tenant, the PAN of the tenant, and in case there is TDS involved, you're supposed to report the TAN of the tenant also. Apart from that, if the property is self-occupied, you have to just mention the basic details, the address of the property, the locality, PIN code, etc. Yes, another new addition to the forms this year is whenever there's interest under Section 24B being claimed, you have to report the loan account number, the amount of interest paid, the amount of outstanding loan, etc. under Schedule House Property. The next schedule that we're talking about is Schedule OS, income from other sources. All income which come under this head, interest, dividend, family pension, savings bank interest, have to be reported under this income from other sources. This head is applicable to all ITRs, ITR 1, 2, 3, 4. This will typically be there everywhere. No specific documentation to be reported here as of now, but I have to mention the amounts under which head they are falling into. Then comes Schedule CG, capital gains. This is a very exhaustive schedule to be filled in for short term, long term. You're supposed to report the date of sale of the particular asset. You're supposed to report the sale value. You're supposed to report the name. So I first speaking of the shares and mutual funds that are there, you're supposed to report the name of the script. You're supposed to report the quantity being sold, the sale value per share, FMV per share wherever applicable, which I earlier spoke of before 31st Jan 2018 ke pehle ka, if you have any shares which are being sold now, you're supposed to report the FMV of those shares. You are supposed to report the date of purchase, the purchase cost also. Another important field you should check while you are filing the details here is whether STT has been paid or no. If the STT has been paid, that will come under a different rate of tax category. If the STT is not paid, these are debt oriented funds, it will come under a different category. 23rd of July 2024 was a very important date. Before that, the rate of tax under cap long term and short term was different, and after that, it was different. So, this year, typically, when we are preparing computations, you have to also ensure that you put the sale rates correctly because tax rates and exemptions will be calculated accordingly. So capital gains in case of shares and mutual funds is a very exhaustive list. Again, this year, what I saw from around is lot of softwares have given an option where you can directly import the broker's report, realized gain loss statement into the software, which gets auto-filled there. So lot of the commonly used broker platforms, Zerodha or ICICI or HDFC, commonly used ones are have integrated with our tax softwares where you can directly import the details that's coming in their reports. Also, specific cases where assessees have been holding shares since a very long time and there have been changes in the broker. So earlier I had broker A, now I have broker B. Very important that you report the cost correctly. Don't go directly on based on what's there in the broker statement in such cases because broker might not have the historical data of your shares which you were holding since a long time. So you have to check with your assessee if there was a change in the broker, and you have to also ask them to give you the original cost of the assets because that is what is allowed as per law. Coming to the other part of capital gains, wherever there is a sale of property or sale of flat, land, agricultural land, not agricultural land per se, but yeah, any sale of land, plot, houses, residential units, etc., you have to report the person to whom you're selling. So, name of the buyer has to be reported, PAN of the buyer has to be reported. If there are more than one buyers, you have to report. So, if I sold a property to Mr. A and Mrs. A, I am supposed to report Mr. A and Mrs. A's PAN, address, etc., Aadhaar number also in the return and mention that maybe their share in the property is 50-50% each. So I'm supposed to report these details. The address of the property has to be reported. You have to also report, of course, sale value you will report, the cost of acquisition you will report. In case you're opting for the indexation option, you have to report appropriate year of purchase. If there is a reinvestment section 54 EC deduction being claimed, you're supposed to report the date of this investment. You're supposed to report the cost of this new investment, the section under which you're claiming your deduction, and a very, very recent requirement again, if you are investing or keeping money aside in capital gain account scheme, you're supposed to report the account number also there. So yes, capital gain is one schedule which has to be filled with utmost care because the amount of assets and the amount of income involved is very high. Plus, the reporting requirements are very detailed under this schedule. The next head of income is the next schedule is schedule BP, business or profession income. This is typically available only in ITR 3, ITR 4. ITR 4, very few details to be reported. So ITR 4 is for presumptive scheme of taxation. So if an assessee is opting to pay tax under say 44 AD, where they want to compute their profit based on 8% or 6%, whatever is the applicable rule to them, 8% in case of digital transactions. Sorry, 8% in case of non-digital transactions, 6% in case of digital transactions. So they have to report the turnover, they have to report the percentage that they were opting for. So ITR 4 typically has very few fields to be filled in, but ITR 3 is again a very exhaustive list of schedules that you have to fill in. In case of business profession income, apart from the profit, you have to report the disallowances, if any. You are supposed to report the nature of business activity. This year, there are few new business codes also which are introduced based on the relevancy. And so, one of the codes that is introduced is the social media influencers income. So these days, lot of influencers have a lot of income under the head business profession. So for them, a specific code has been specified to be inserted. If an assessee, so for example, if I'm a partner in a firm, I do not have business income, but because I'm a partner in a firm, the share of profit from there comes under the head business. I will have to fill ITR 3 and report it in Schedule BP. In these cases, the business code that I have to select will be share of profit of from firm only. So there are a lot of codes you have to, based on the nature of business of the client of the assessee, you have to select an appropriate code under which you report the income. A detailed schedule on depreciation forms a part of this schedule. Depreciation, again, we know as per income tax, we have five blocks of assets. So, opening balances, depreciation, rate of depreciation, date of purchase of asset, closing balance have to be reported in detail under this head. So, business profession, the two major schedules which need to be filled in with a lot of precision, a lot of details is schedule of capital gains and schedule of business profession. Others are also important, but yeah, little less, I mean, little easier as compared to capital gains and business profession income. Schedule 6A, this has to be filled in for assessees who are opting for the old scheme of tax and they want to take the benefit of these deductions, 80C to 80U. This year, like I mentioned earlier, there is a detailed requirement to mention the document numbers of all the deductions being claimed, details in some places. So home loan number, home loan outstanding balance, home loan original balance, etc. have to be reported. PPF number, PF number, all these numbers, whatever deduction you're claiming, whatever is the nature of the deduction, accordingly, document number has to be mentioned. 80G, where donations are involved, appropriate 50% eligibility, 100% eligibility, even receipt numbers have to be uploaded this year. So, if I have made a donation to CRY or I've made a donation to PM Cares Fund, whatever fund I've invested in or whatever charitable organization I've made a donation to, I am supposed to mention the name of the firm. I'm supposed to mention the receipt number based on which I'm claiming this deduction. I'm supposed to mention the amount which is paid in cash, the amount which is paid by mode other than cash. So again, 80G, exhaustive list of details have to be mentioned. So this is primarily done to ensure that assessees are taking deductions of things they have fairly. There's no misreporting or over excessive claim of any kind of deduction. That's why the forms mandate to submit the detailed list of requirements. Schedule EI is for exempt income. So all exempt income, interest on PPF, agricultural income, income from Sukanya Samriddhi account, or any other nature of exempt income, gift received from relatives, received on the occasion of marriage, any type of exempt income is to be reported under Schedule EI. Minors income to an extent. So minors income after the deduction of 1500 rupees is supposed to be reported here. Then there is a schedule for special rate of incomes. This is for winnings from lottery, short-term capital gains, long-term capital gains, which is beyond 112A, cryptocurrency, etc. have to be reported under special rate of income schedule. Then the schedules where we have to claim credit of the taxes that we are paying. So TDS 1 and TDS 2. TDS 1 is TDS on salary. So this TDS, the TDS that you fill in here in this schedule has to match with the TDS as per Form 16 and TDS as appearing in your Form 26 TDS 2 is for TDS on other income, which is other than the salary part. So TDS as per Form 16A, this has to match. TCS, if there is any tax collected at source on transactions where there are foreign remittances made or the assessee has paid for any kind of foreign tools, etc. TCS, which is the client had basically from the client tax was collected, and now when they're filing the return, they're supposed to claim a credit of this, will come in this schedule TCS. Very not a new addition this year, but since last year there is a schedule of VDA, virtual digital assets, basically deals with crypto, where all details related to your crypto income have to be mentioned in this schedule. Um, I have few more schedules to discuss, but as of now, do we have any questions?
Yes, we have a few.
Okay.
In the Q&A box. So, if the assessee has income from profession and also from salary, he has two house properties. So, what ITR will be applicable?
ITR 3 would be applicable.
Right. Okay. If the assessee has sold house property and tax is low, if opt for calculation of capital gain with indexation.
So, yes, this change has been done after 23rd of July 2024 when the interim budget was announced. After that, for resident assessees, they have a choice whether they want to go for the higher tax rate with taking the benefit of indexation, or they want to go for a lower tax rate by avoiding the indexation. That is their choice. So, you should see which one of it comes beneficial in your client's case and take it ahead accordingly.
If someone receives a finder's fee for introducing a client to a mutual fund distributor and it's not the person's regular income, should it be business or other source?
If it is a one time, again depends if there is so commission, right? Or
Yeah,
can you
it's a
repeat?
finder's fee. You can say it's at sort of a commission only.
So see, it depends if there is deduction of TDS under 194H or 194J, you will have to take it under business head. That will be better. If it is a one time adventure kind of an income, it may go under other sources.
Uh, yeah. Also, it is commonly seen that some income is shown in 26 AS but not in the AIS or vice versa. If you can just throw some light on the reasons it could be.
So any income on which TDS is deducted will definitely come in 26 AS. Yeah, it will come in 26 AS. In the AIS, so AIS is generated based on the SFT filing requirements that these entities are supposed to report. So AIS will always have more information than your 26 AS because AIS, so even for example, savings bank interest, there is no TDS on savings bank interest, hence it will not come in your 26 AS. But as a reporting requirement, banks are supposed to report your savings bank interest in their SFT filings, which is where from it comes in your AIS. So AIS is always going to be more detailed than the 26 years because scope of reporting there is higher for the entities.
Can you throw some light on calculation of interest under 234A?
234A. Okay, so 234A is interest payable if there is a delay in filing of returns. This Yes. So this question, I suppose, comes from the fact that the due date has got extended to 15th of September. But unfortunately, like it has always been from the time of COVID, the due date for 234A remains 31st July. So any assessee where the return is being filed after 31st of July, which is after tomorrow, and they have a tax payable, 234A will apply right from April till the date of filing of return. Because the department was very clear on this. The date of filing return has been extended, but for the purpose of 234A, there is no extension in the date. So this was a similar situation when during COVID we had multiple extensions coming in, but 234A was still applicable. In fact, because of this, even assessees where advanced tax is not applicable. So if there is a senior citizen who does not have a business income and advanced tax typically is not applicable for him. 234B, C do not apply, but still 234A will be levied after tomorrow because the return is filed beyond the 31st of July.
Correct. Surcharge on income from mutual fund, which is restricted up to 15%. Whether income from mutual fund to be shown under dividend income only, that's
So
the
depends
question.
on the nature of
Okay.
income. If it is dividend, it will come under dividend. If it is arising on transfer or sale of the mutual fund, it should come under the head capital gains.
Okay, debt-oriented mutual fund also, so interest also can be a,
Sorry.
there can be debt-oriented mutual fund also, so interest also can be, interest from mutual fund can also be an income.
So
Yeah,
that should come under other
other
sources.
source.
Yeah.
Yeah, I think that's all in the questions.
If I am falling in exclusions, I see some more questions.
Oh, sorry.
Yeah. If I am falling in exclusions of ITR 4,
Yeah.
but I want to opt for presumptive scheme, which form of ITR should I file? In that case, ITR 3 you can file. So ITR 3, but you choose for the presumptive scheme. I think we have covered the questions that are still there, right?
Yeah. How to claim exemptions from tax savings mutual funds while filing?
So, tax saving mutual funds basically the deduction is available under section 80C. So, ELSS, right? 80C. While saving MFs, while tax saving MFs, yeah. So, tax saving MFs are eligible deductions under 80C. Whenever the client is investing in any kind of such mutual funds, you get a benefit under 80C. So, you have to show it under deductions. But again, this will come into play if the old scheme is coming to be beneficial for your client.
Yeah. Yeah, that's
Okay.
all the questions. Yeah.
Yes. So I go ahead with some more schedules that are there. CYLA schedule is for current year loss adjustment. If I've had this is basically for inter-source head adjustment. If I have loss in the current year, which I have to adjust inter-head or inter-source within the same year, they will form a part of this schedule. This schedule is typically found in ITR 2 and 3 because again, if there is any carry forward of losses or etc., it will not be ITR 1 and 4 cannot be filed. So this forms a part of ITR 2, 3. Any brought forward loss adjustment, I have losses from the past years which I want to either claim this year or I want to carry forward next year. But basically, to show the brought forward loss adjustment, the schedule reporting has to be done. CFL is carry forward of losses. This year, I have losses which I want to carry forward to the future years. This will be coming under the head schedule CFL. Schedule AL is assets and liabilities. This is required to be filled by assessees if the total income exceeds 1 crore. This is again applicable to ITR 2 and 3. And like pointed out earlier, if an assessee has business income and they are filing ITR 3, if there are any personal assets which do not form a part of the balance sheet, professional or business balance sheet of the assessee, Schedule AL will have to be reported with these assets. If the assessee has one common balance sheet for his personal assets and business assets, and this is entirely being reported under the balance sheet which is there in Schedule PP, then Schedule AL is not required to be filled. Schedule AL is basically a reporting requirement. So contents of Schedule AL include details of various properties that you hold, residential properties, so other than residential properties, land investments, etc. Shares, mutual funds, jewelry, any precious assets like jewels, paintings, cars, aircrafts, etc. Lot of specific fields being given there. You have to fill in the cost value, cost price of those assets. You have to report the closing balance of your bank accounts there. You have to report the value of your fixed deposits there. You have to report the closing value of your shares and mutual funds there. You have to report any liabilities, loans, home loans, any other friendly loans, etc., which are your liabilities have to be reported there. But again, Schedule AL is to be reported if your normal balance sheet, which you're reporting under business head, does not have those assets. But in case of assessees where ITR 2 is applicable, like for example, I have income from salary, other sources, but the limit crosses 1 crore. I am supposed to file ITR 2. I'm supposed to report all my assets and liabilities in Schedule AL. Next schedule that we speak of is foreign source income. If I have some income which is earned abroad and I'm a resident in India, I have to report that income in my Indian income tax return. So typically you have to be careful of this schedule for assessees who have any time held any who have ever been to a foreign country for either education or some employment or some business purpose. So you have to check with them whether they have any foreign bank accounts, foreign signatory accounts, or foreign directorships or any foreign assets, house properties, funds, etc. Also, nowadays people invest on various stock exchanges sitting here in India. So for investing in those stock exchanges, you will have portfolios on abroad stock exchanges, abroad bank accounts, which you're supposed to report in your income in India. Then we talk of schedule. TR, which is tax relief under Section 1991, any withholding tax abroad in any country, the credit of which you are claiming here based on DTAA benefits or etc. etc. One thing you have to be sure you're filing Form 67, and that credit you can claim under this schedule, tax relief. Again, if you have any foreign source of income, you can't file ITR 1 or 4. So by default, the schedule is applicable to ITR 2 and 3. Schedule FA, foreign assets. Again, yeah, we've discussed this. Foreign bank accounts, properties, etc. have to be reported here. Very, very important reporting, because there in recent times there have been lot of assessees who are getting notices because they did not report their foreign assets in their in return of income. Possible that you do not have any income from those assets, those must be just dormant accounts lying there. But as a reporting requirement, you are supposed to disclose all your foreign assets in the schedule FA. Another important point to notice, foreign asset schedule, you're supposed to report monetary values there. So balance of bank accounts, balance of your fund accounts, etc., have to be reported here. Here, they speak of the date of reporting as 31st of December. See, we are filing a return for a financial year April to March. The income from these accounts will come from the period April 24 to March 25. But the asset reporting that has to be done, that is as on 31st of December 2024. So this there's an anomaly between the data they ask, but yes, this is the data they ask. Income has to be for the tax period that we are filing the return, which is April to March. But foreign asset reporting has to be as on 31st of December. This is the requirement of the form. Details of any unlisted company shareholding. So all people who are directors in unlisted companies, private limited companies, or people who hold unlisted shares, they have to fill this schedule where they have to report the date of acquisition of these shares, the company where this shareholding is there, the sin of the company, the cost value of this company, whether there was any new addition or transfer of these shares have to be reported in this schedule. So yes, these apart from this, there are certain other schedules also, but what I've tried to cover is the major ones which are there over here. So do we have some more questions?
Yes.
Hmm.
Sale of foreign equity shares, where to report in ITR form if the number of transactions are large. Sale of foreign equity shares.
Sale of equity, foreign equity shares, yes, it doesn't depend on the quantum, but depends if there is a transfer, it has to be reported.
Uh, Section 44 AD and 44 ADA, difference between that.
44 AD is a presumptive scheme of tax where assessees who are having business income and up to a particular turnover limit which is specified, if you fall into that category, you can opt for this presumptive scheme of tax where you declare your income based on 6%, 8% of your total turnover. This 6%, 8% depends upon whether you've had transactions in cash or non-cash mode. So if you have transactions in cash mode, 8% rule applies to you. If you have in non-cash mode, 6% rule applies to you. If you have both, you have to segregate between the turnover which was in cash and turnover which was in non-cash modes, and accordingly apply the percentage. 4480, yeah, so 4480, typically ITR 4 can be filed if you do not fall under any of the people who are not allowed to file ITR 4. In that case, you'll have to file ITR 3, but you can take benefit of 4480. 4480 is a presumptive scheme for professionals. There are specified professionals listed in the section. These professionals, if they want to opt for a presumptive scheme, they can show 50% of the turnover as their income and file the return. Now, the reason people opt for these schemes is these schemes are presumed. So basically, you presume your income, you do not have a requirement to maintain your entire balance sheet, P&L, etc., books of accounts. That is why these schemes are there. But again, case specific, you have to read the section correctly, and whatever, if you fall into that section, you can opt for these schemes.
Okay. Um, uh, Explanation for advanced tax 234B and C in cases of senior citizen not having business income. I think you already touched upon that.
So 234 B and C. So basically, advance tax is to be paid by assessees who have a tax liability of more than 10,000 in a year. And there are some people who are exempt from payment of advance tax, one of which happens to be a senior citizen, resident senior citizen who do not have business income. So these people are not supposed to, I mean, they're not supposed to pay advance tax. And interest under 234 B and C is not applicable to them.
Schedule unlisted shares should include in foreign company shares too. The schedule of unlisted shares, do we have to include foreign company shares in that?
So for foreign company shares, you have Schedule FA. Unlisted is unlisted on the Indian Stock Exchange. So that will be dual reporting. So not required in foreign shares are not required to be listed in unlisted shares.
Indian fund houses investing in foreign funds to be disclosed under FA schedule.
Sorry, I didn't get
Indian
it.
fund houses
Huh.
investing in foreign fund, is that supposed to be disclosed under the schedule FA?
Yes, you have to disclose that.
Can one file 2-3 years back return, update return?
Can you file 2-3 years? Updated returns this year, they made it 4 years, right?
Yeah.
You
Yes.
can file your updated returns for the past 4 years with payment of taxes of penalty of particular slabs.
Name list of schedule for unlisted shares. That's the name of the
For
schedule.
unlisted shares, schedule, it is schedule IF, but let me check it once again. I'll just check this and let you know the name of the schedule.
IF is
IFS is correct, right?
yeah.
Okay.
How can we calculate turnover in case of intraday trading? You covered that in the beginning. Intraday
So
trading.
intraday trading, whatever is your net profit or loss becomes your profit or loss. Turnover is the sale value, purchase value is your purchase. So again, this question is more relevant in case of F&O transactions. Intraday is speculative. Speculative may you can take your sale value of your shares as sale and purchase value of those shares as purchase.
For so in foreign asset, if particular asset is not being defined specifically, where it should be reported, like investments in trust, and which peak balance is to be reported.
So, schedule FA, there's one last schedule, last head over there where you have to report any other asset. There you can report this. Peak balance will not apply in these cases, but what you can report is possibly your shareholding value over there because in the balance sheet of the trust also there will be some value to your shareholding. That is what is to be reported.
Okay, I think that's all in the perfect. Just 1 second. Akash Tiwari has raised a hand. I'll just allow him to speak if that is okay.
Yeah.
Yes, Akash, I have unmuted you. Can you please ask your query? Akash, can you unmute yourself? Okay. No response. I just know what happened. Yeah. Yes. I think I can proceed. I think that.
Yes. Okay, so we discussed some important schedules that we are supposed to fill in the ITR. Additional reporting requirements. You have to report if your assessee is having a GST number, GST registration, you're supposed to report the GST number and the turnover which is reported in the GST returns. If an assessee has multiple GST numbers across various states, you're supposed to report all of them with the respective turnovers. And this data gets also this happens to be forming a part of the AIS. So you have to ensure that it matches with the GST return. And in case there is a discrepancy, you should know the reason for it and note it down because in case you have a notice or a question later, you should know what was the reason of discrepancy. Typically, reasons of discrepancy would include something like something was shown in GSTR 3B of the future period. Maybe because I missed to show it in March, I showed it in the next period, which is why For that year, my turnover is lower than the turnover appearing in my P&L. So possible that there is a variation, but as far as possible, it should match. Where it is not matching, there should be a valid reason for what the difference is there. For individuals who are directors in companies, they are supposed to report their directorship details. You're supposed to report their TIN number. You're supposed to report the companies, number of companies in which they hold their directorship. Number three, company shareholding details. This we already discussed. If you hold any unlisted shares of private limited companies, this has to be reported. Partnership firm details. So for partners in firms, you're supposed to report the firm name and firm PAN where you hold this partnership. You are also supposed to report the share of profit, remuneration, interest from that firm, the closing capital account balance from the firm. This is the reason why for the firms which are under audit, the partners of such firms, the due date is same as the audit due date. So if I'm a partner of a firm, the firm is under audit, I'm not under audit, but still the due date for filing my return may be the same as that of the firm, which is later, which is October as of now, because the closing balance of my capital account with the firm has to be reported in my ITR, and that can be done only when the audit for that firm is complete. Foreign assets and liabilities details we discussed in detail. Schedule AL we discussed in non-residents is to report a few things. So if you're a non-resident or your assessee is a non-resident, you are supposed to report the country in which they are a resident, and you have to report the tax identification number of that country. So if I have a client who is a non-resident in India but is still filing a return here because he has some income here, and he is a resident of, let's say, Singapore, the tax identification number over there has to be reported in this return. For cases where people who do not have tax identification number, for cases of US, you can report the social security number from there. In other cases where, let's say, for example, somebody's gone abroad for education purpose or employment purpose, but as of now do not have a tax identification number there. For such cases, you're supposed to report the passport number of these people in the return. Another specific requirement for non-return is non-residents is to report their number of days of stay in India during the previous year. So for 24-25, you're supposed to report the number of days of stay that the assessee was here. In fact, you're also supposed to report the number of days of stay in the past 4 years. This is a reporting requirement basically to check the residential status of the assessees. For non-residents, you are also supposed to select an option in the return which mentions by what clause of section 6 are they becoming non-residents. Is it because of the 182-day clause, 60-day clause, etc. Whatever is the rule applicable to them or the section by virtue of which they are non-residents, you have to select an appropriate section there. Apart from that, we already discussed in case of assessees where you have business income, you are supposed to report the balance sheet P&L. Typically for business, you have to report that. But if the assessee has a common balance sheet for their personal assets and business assets, you are supposed to report that under the head business. Income from partnership firms, remuneration, share of profit, closing balances to be filled under business head. Details of partners. Okay, this details of partners, directors, shareholding extra is to be reported. This we are talking of returns of firms, etc. अगर partnership firm का return है, so you have to report details of all partners over them. If it's a company's return, which we have not largely covered here, but yeah, if there's ITR 6 applicable, you have to report the details of all the shareholders there. Form 67 we already discussed is to be prepared for credit of any foreign taxes. So with this, we come to an end of the second part of our session. We first had discussed pre-filing stage where documents required were discussed. The second part was a detailed process of what are you supposed to exactly do once you have the documents. And now, when you've prepared the computation, your client has checked it, AIS is matching, 26 years is matching, and you have determined whether there is a refund or whether there is a tax payable. If it's a refund, um, typically you have to just go and file it. If there is tax payable, you have to ask your assessee to pay the self-assessment tax under the correct challan, under the correct minor head, major head, etc. Once that tax is paid and you report the self-assessment tax in the return, you can go and file the income tax return on the site. The process doesn't end here. Once you have filed your return, we come to the third part of the session, which is a post-return filing procedure. Once you have filed the return, um, within 30 days of the date of filing, you have to e-verify the return. This deadline was earlier 120 days, which is now got reduced to 30 days. Within 30 days, you are supposed to e-verify the return of your client. How do you do it? You have to log into the income tax portal. There are various modes by which you can do it. The easiest and the most widely used one is Aadhaar OTP. So once you click on this option of Aadhaar OTP, there will be a OTP that your client will get. And you have, when they give you the OTP, you're supposed to put the OTP and the return shall be e-verified. Other modes by which this can be done is by generating a bank account EVC. So for cases where Aadhaar OTP doesn't work because of various technical reasons, like Aadhaar does not have a phone number, the phone number there in the Aadhaar card is not active, etc., etc. The second option that you can use is by bank account EVC. अगर आपके एसएससी के पास एक बैंक अकाउंट है जिसमें फोन नंबर एंड ईमेल एड्रेस मैचेस विद दैट ऑन द इनकम टैक्स पोर्टल and the account is validated on the portal, you can set an electronic verification code, and once you put that code in the return is verified. Another option is to do it through net banking. Your client can log into their net banking portal of any bank which is a part of the e-filing process. Let's say HDFC, ICICI. Most of the banks which are commonly used are a part of this. Are allowed on the portal. They can go to the net banking portal, navigate to the relevant menu where they can see income tax return filing. From there, they can come to the website and generate a code and e-verify the return. Demat account EVC is possible for assessees who have a digital signature certificate. Even that can be used for verification. If all these methods fail, there was this traditional method where the ITRV used to be signed, physically signed by the assessee, and that has to be sent by post to CPC Bangalore. And this is normally very less used after the digital methods have come. But yeah, in cases where none of the above methods are working, this is the last resort where you have to ensure that the ITRV reaches CPC Bangalore before 30 days expire from the date of filing of return. Once you have filed, you've completed e-verification, your status on the portal, your income tax returns status becomes filed, say, it will become verified. You will be able to download the acknowledgement which will show your total income, which will show your total taxes paid. Till before this stage, if you've not e-verified your return, you will get an ITR acknowledgement which just mentions the date of filing and your name PAN. It will not show a detailed final ITR. Also, in case of a very rare situation, after you filed your return, you realized there was a mistake. You have not yet e-verified the return, but you realize there is a mistake in the return filed. Very recently this feature is launched, you can discard the return and file it again, but to be avoided, because again, um, you should be precautious before filing it only, but inadvertent kuch reh gaya hai and you realize it before e-verifying, you can discard the return. Once e-verified, return cannot be changed. It will be treated as complete and done for that year. You will be able to download the ITR acknowledgement, and this completes the filing process. After this, you have, if your client is having a refund, you have to ensure there is a pre-validated bank account on the portal. Otherwise, refund will not be credited to the account. So whatever account the client has selected for issuance of refund, you should ensure that the account is validated, pre-validated on the portal. Of course, this is not a part of a return filing procedure, but a good practice, because ultimately the assessee should get due claim of what was refunded to him. Last step, which is again not a part of return filing process, but once the return has been filed, the system of the income tax department will auto verify the claims. It will auto verify, generate intimation under section 143(1), which will typically have two columns: as processed by the department's portal, as filed by the assessee, and it will show a comparative. If it matches, you don't have to do anything. If it doesn't match, you have to check the reason for discrepancy, etc. But this is again not a part of the filing procedure per se, but after you file it, after the department has processed it, after you have 143(1) intimation, this is the step required to be done. So yes, this brings us to an end of the procedure for filing of returns. Do we have any more questions?
Yes, a few in the chat box.
Yeah.
The taxability on any bugs in the ITR utility.
Any bugs in ITR utility? Uh,
I
we're
think
still figuring
yeah,
out.
it's too soon. It's still yet to be tested properly.
Yes.
Uh, Taxability on compensation received on redevelopment of property. On where to show that in
So
the ITR.
okay, so this will have a lot of things covered, but I'll tell you a few common ones. When the society is going into redevelopment and you have handed over your flat for redevelopment, there'll be certain things you receive from the builder. Let's say you will receive rent as compensation, you will receive corpus fund, you will receive shifting allowance, some transitory allowances that you will receive from the builder. All this is being termed as hardship allowance. So you have to hardship allowance. There are various rulings and judgments now which say hardship allowances are capital assets and not taxable in the hands of the assessee. They have to be reported as exempt income. If you're speaking of once the PAAA is signed and possession of the flat is received, it has to be shown under the head capital gains. But specific case again, lot of implications here. So yeah, this was a generic answer, but yes, case to case and depending upon what is being received, the declaration will be based on that.
So now, before I give you a well-deserved vote of thanks, I would like to invite our chairman, C. Namrata Dedia, for just a few announcements relating to the student committee.
Yeah, so I would thank you, Varsha, first of all, wonderful session covering everything in detail. So quickly, because we have an audience of students here, I would just like to inform them of the student committee or the student activities of the chamber. Uh, so this was just the start of the season, the first event for the year, as Varsha mentioned earlier. Immediately after this, this Saturday, we are launching a long duration certificate course on income tax. And apart from this, throughout the year, the chamber conducts several student activities, which includes your time to time webinars relating to the topical deadlines that you are working on regularly. Long duration courses like the one on income tax, there is one more on GST, and then there are targeted courses which are relevant to CA students, law students, orientation for CA students who are just freshly joining articleship or have just passed out and don't know what to expect in terms of articleship. So I would request students attending who are not already members of the chamber to join as a student member. The membership fee is just 590 rupees for a year, and what you gain in terms of knowledge, in terms of exposure throughout the year is much more than the membership fees. So I just take this opportunity to request everyone to go to the chamber's website, find out the activities of the chambers for students, and please enroll as a student member. So, Shreyas, over to you for the well-deserved vote of thanks.
Thank you, Chairman. On behalf of all of us, I would like to extend a heartfelt appreciation to CA Varsha for delivering such an informative and engaging session on the basics of income tax return filing. Your ability to simplify the tax filing concepts and provide a clear, practical, with examples as well as uh, uh, basics as how this session has helped us not only get insightful but also incredibly useful knowledge today. Many of us who are currently in the process of filing income tax return must have definitely benefited from your guidance. We now feel much more confident and better equipped. Thank you for your patient addressing to all the queries and sharing valuable tips. Your effort in preparing and presenting the session clearly shows your commitment to supporting our professional and personal peers and helping them in the growth of this domain. Once again, thank you for your time and expertise. We hope to have many more sessions from you in the future. Thank you for your participation, everyone. Thank you.
Thank you. Thank you so
Thank
much.
you.
Thank you.
With that, I'll just end the webinar.